Welcome back, guys. Today we are looking at ticker CCI. This is Crown Castle, a really interesting dividend paying company that I think a lot of investors are overlooking. They have a strong dividend yield at near 6%, a pretty good dividend history, which we'll talk about, and a number of other things going for them that we'll discuss in this video. We're going to go over the pros and some of the cons of this company so that you get a better, well-rounded picture on if this is an investment you would like to make. Of course, this is not financial advice, but if you guys like the video, please consider liking and subscribing for more content in the future. But for now, let's jump into the video. So here's what we're going to look at when we're doing our due diligence on CCI. We're going to start with a company description so you guys know what this company does, how they make their money, and then we are going to go to their price action, just a chart seeing how their stock price has been performing over the last 1 year, 5 years, the all-time chart, which is really, really important when you're looking at a stock that pays a high dividend. You want to avoid dividend traps. Then we're going to look at the dividend history. Another really important way to look for dividend traps is that dividend history. We're going to look at that on Seeking Alpha, and then we are going to go through the investor reports, their presentations, any news from the company on the company website. Crown Castle as a company is really, really interesting to me and definitely unique. So what they do is they own, manage, and lease towers, fiber solutions, and small cell networks to other companies. So it is actually a REIT, a real estate investment trust, which I think is excellent because REITs have been really beaten up by the interest rates recently. So when we scroll down, we can see there is some good information here. They have 4,000 employees, 30 years of experience with the networks, big enterprise value, 40,000 towers. So what's interesting with this is with stuff like 5G, connectivity, everything becoming online these days, I think CCI has a really good future ahead of it. Now, I'm not estimating, I have no idea, but just based off the sector they're in, I think this one is great for growth in the long term. And so when it comes to what they offer, so companies like AT&T, Verizon, T-Mobile, all of these companies will purchase leases with CCI to use their towers, to use their fiber optic cables. And so what this does is this provides people with connectivity. It provides these companies with all of these abilities to have clients and to provide for these clients, but not have to manage and work on these cell towers, not have to worry about the upkeep, which can be a huge drain on a company if they're not used to doing that. So Crown Castle actually provides that, which I think is brilliant. And another beautiful part about it is even now with interest rates being so high and the cost of borrowing money for them to fix towers, to maintain everything, because it does cost a lot of money. But as those interest rates fall, I think that Crown Castle could see some really good booming in growth as well as return on investment for all of the investors who purchase in, which is one reason why I am looking into this company, because not only is the sector great, but it's a REIT that gives some good diversity. And so honestly, another thing that I love about them is their website is phenomenal. This is my first time going to their website when I was making this video for the doing some DD, of course, but all of this, it's really well organized. It looks really good. They have some really good just all these graphs and charts and whatnot, and they show how they want to grow, which I love to see because honestly, when it comes to younger generations, websites are huge. If you have an old or outdated website and investors aren't going to be interested in purchasing based off how little effort you've put into your website, I think that it is a huge red flag, especially when I'm looking at some companies. So it is interesting. They have their leadership on here. I'm not going to go through all of this, but to be honest, leadership is extremely important. If you want to go through and read this, I'll link the website description down below. But now we're going to talk about something that's really, really important, equally as important as what the company is and does, their price action. So I have Crown Castle pulled up simply on Google. If you guys are ever looking to research a stock just for their price action, I like to use Google's tool. It's very simple and very replicable. So feel free to try this out yourself with any stock. You could almost replicate everything I do in this video with any stock of your own, or you can watch me do it if you're interested as well. So we can see that for Crown Castle, they had a great period of growth in their price when they ran about 37% from late October to early December, and have since then been trailing off where they're down almost 9%. If we look on the 1 year chart, we can see that it is beaten down 21%. And they had a period where they just continued to fall down and they dropped 36%, which is really, really rough. And of course, then they bounced back up. They did hit a low of 85.89, which I don't like to see. That scares me a little bit. But they did bounce off that nicely and had a great return for that time period. Now, one reason why this thing has been falling so heavily, and the 5 year chart shows this, it was trading all the way in the 200s before it started this dive, is because of interest rates. So for those that don't know how REITs and interest rates work together, a company that is a REIT will borrow a large amount of money to purchase assets that they can lease out to clients and make more money off of their leases than they are paying in that interest. And so that is key. That's how a lot of these companies make money. They don't own the properties outright, but they are putting money into the properties every month from the tenants. And so it works similarly to just a mom and pop owning a rental. They just do it on a huge scale. So when interest rates are high and it costs more money to borrow debt, they are going to make less money, because instead of putting the money back into the principal on the property that they are owing money on, they have to put it towards the interest. So it does hurt these companies, and it really hurts them in expansion, because they're not going to go out and buy a ton of properties when interest rates are at 8%, because when they were at 3%, they were making double the money, more than double the money, just based off of the interest rates. So it is a really difficult concept, but if you get it down to the basics, I hope that it was an easy explanation for you guys, but I'm not the best at explaining that stuff. It takes a long time to understand this. So if you don't understand it, do not feel bad. It took me years of reading financial documents to truly understand how these things work together, and I am nowhere close to being an expert. Now, if we zoom out and look at their max chart, they are up 732.5% all time, which is great. And we've seen that they had that period of growth from 2018 until 2022, where they were up 80 something percent. And now they have trailed way off. So it is getting back into a nice buy range. They're not way out of proportion with their PE ratio, which is 31. That is a little bit high, but it is doable. And their dividend yield sitting at 5.8%, which is great. When it comes to companies that have good growth, I think that a little bit of a lower dividend than what I like. I usually like the 7 to 8% range, but you do have a little bit less risk because it is lower. But we'll talk about the dividend later on. I'm getting ahead of myself. But overall, pretty beautiful chart, and I don't have any real complaints on it. It is getting back into a better buy range, and that's why I am talking about it, because I think people would be interested in this company. Now for another key part of a dividend stock, we're going to look at Crown Castle's dividend history. So they have 9 years of consecutive dividend growth, 9 years of consecutive dividend payments. If you remember, this company was founded in, I think, 1998, but they just started paying a dividend in 2014. They have not always paid a dividend, and that is okay. Some companies decide to start paying a dividend later than others. The key thing is, how have they been paying their dividend? Have they been consistent? How has growth been? And that's what we're going to look at. So over the last 10 years, they started paying their dividend regularly, which means they pay every quarter at 35 cents per quarter. Now, they are now all the way up to $1.57 per quarter, which is really good when it comes to growth. That is some astronomical growth, especially 2014 to 2014, where they jumped it from 35 cents to 82 cents, over a 100% increase, which is really phenomenal. And since then, they've continued to have it trail upward with no cuts. That is really key when I look at a dividend stock. No cuts. Of course, I do own a few stocks that have dividend cuts, but it's always for a good reason. Now, looking down at their payouts every single year, they don't pay special dividends, which some companies do, but because it is a REIT, they are paying out 90%, which is really good. You get some of that safety with the REIT. Now, what I was surprised about with CCI, and definitely pleasantly surprised, is their compound annual growth rate. So their 5-year CAGR, which compound annual growth rate is the compounded annual dividend growth over the last 5 years for the 5-year, meaning that when they increase their dividend, what percent are they able to increase it over this time period? And so this is really strong. A near 8% CAGR is great for the 5-year, and their 3-year is 8.3%. So they have a lot of dividend growth, even though their sector relative grade is B- from Seeking Alpha. It is really phenomenal. And we go down, we can see their year-end dividend yield percentage. And so they have been growing, which I really do like to see. And if we go to the dividend scorecard, we can see a few more things. So yes, they have the 5.8% dividend yield. Their annual payout forward is $6.26 per share, payout ratio of about 90%, and their growth rate, of course. So a lot of good stuff here on the dividend history side of things. I think that because they have such strong growth, it makes the company definitely higher risk, but higher reward as well. Now it's time for the most action-packed part. We're going to go over the company's financials. For those of you that don't like this part, I really recommend you just learn to do it. Even if it's not your favorite, it really gives out a bunch of information that people need to know. And I think it's a very overlooked part of investing and learning about these stocks. So the first thing we're going to jump into, we know a lot of this information already. It's them at a glance. One important thing is they have a 7% CAGR, which we talked about. Now, they did release their Q4 of 2023 dividend, and it actually did not include an increase in 2023, which they weren't anticipating to do, which is okay in my opinion. Of course, I like when they increase their dividend, but because interest rates are so high, it's going to be harder for them to have cash on hand. So while I don't love it, I completely understand it, and I don't think it's a sign for a dividend cut. Now, they gave out a little bit more information here on what their towers do, on what the small cells do. It's actually so interesting. And a lot of this presentation, it's a really well done presentation, which is important to me as well. But this presentation shows the necessity for companies like Crown, because the future is going to be online. That's not even just my opinion. That's just the way that it is. And so they have a bunch of different ways to make money from that. And so I think it is a really good growth environment. So we can see here where their financing comes from. So they have external financing for fiber acquisitions, tower acquisitions, and then fiber capex, which is where they split it between the two, it seems. You have tower capex and then common stock dividends, share buybacks. That all comes from cash flow. So because cash flow is going to be a little bit more limited with interest rates being so high, I would expect share buybacks to slow, but that is nice that they are even including that as a thought. And then they have their equity and their net debt, which has improved relatively well. Their equity has grown by 20 million. So I do like seeing that. I think they're doing a good job. And I think that the future of this company, like I already said, is just going to continue to rise. So mobile data growth. This is where they're talking about how important all of this stuff is. And they throw in some of their financials with it. And now the interesting thing too is that I didn't realize that the towers actually don't make them, or the towers make them way more money. The fiber optic doesn't make them quite as much money. But with these little cell things that they have, the tech is just insane. If you're a tech nerd, I'm a little bit of a tech nerd. It's so interesting. So basically, for high interest areas, when you're talking big cities, when increased data usage goes up and there's no cells, you can start to see a lag across certain people. And then these little cells increase the capacity of what the main towers are able to hold. And basically it's just making it so your connection is better. And that is all that you need. I mean, everyone knows this day and age, you have to have Wi-Fi. I honestly need Wi-Fi more than I need like heat and AC, because people work from home, all this kind of stuff. So when it comes to any sort of digital job, it's so imperative. And they have these shown as, in public places, and everyone knows it's frustrating when you're trying to find a place on Yelp to see the reviews, see if you want to eat there, and you can't because there's so many people, everyone's using the data. So it is quite a bit of a mess. But I do think that this whole sheet they put out was really interesting. Now, it didn't have a lot of their financials. It kind of gives you the points of here's what we're doing, here's what we're trying to do. So you can see the towers versus the fiber optic and where the money is coming from. And this is the interesting thing. So supplemental definitions, calculations, and additional details. This is the historical towers portfolio yield. So this is just the towers that they own and lease out to companies. So 2000, they were only yielding 3.3% just on the towers. Again, this is not fiber optic because the yield is not sitting at 12.7%. But look at this. It continues to climb over decades and decades as this becomes more and more of a prevalent thing. So in the future, I can't even imagine what it's going to be. I do have high hopes for this company. I would say that I'm biased off of my research, but I don't own this one yet. I'm debating buying in. But let's look at the financials first. Probably the most important page to look at when you are looking to invest in a company. You can see we have their net revenues here. Revenue has been relatively consistent with a really, really big jump. Of course, this is in the full year of 2022, and this is 2023 split into the quarters. But 2023, they did lose a little bit of revenue. $5 million in revenue, which is a ton for us. Significance to them, a bit less, but still, it is important to know that revenue is going to drop a bit with interest rates going up. They're just not making as much money because this debt is costing them more, and it's harder to get acquisitions when you're trying to buy more towers and set up more fiber optic cable. All of that is harder to do, like I've said over and over. Sorry if I'm a broken record, but it is an interesting concept to think about. So overall, I like the financials. I don't think there's a ton of ugly hidden stuff, but I want you guys to go over this on your own as well. Let me know what you think. There is so many categories here, and it just continues on for quite a while. But you can see some cool things with their cash payments from who they're leasing these out to, T-Mobile, AT&T, Verizon, the percentage of who owns what, all of this stuff, which is, I think, really interesting, and their consolidated return on invested capital. So again, tons of information in here. I'm going to link this website down below so you guys can check this out and read through these reports yourself, which I, again, highly recommend that you do.